Welcome everyone, and thank you for joining us for our Alkane Resources Investor Briefing webinar. My name is Nicola Gazzatti, co-founder of Investor Relations Consultancy Corporate Storytime. We're delighted to have Alkane's General Manager, Mr. Nick Erner, and Technical Director, Mr. Ian Chalmers with us today to run through an investor presentation, which will be followed by a Q&A session. Alkane Resources is producing gold from the Tomingley gold operations and is also building a substantial gold and copper resource from the North Molong Porphyry Project, with both New South Wales projects recently releasing significant news events. So without any further ado, I'm pleased to hand over to Nick and Ian to run through the Alkane Resources story in more detail.
Thanks, Nicola. So thanks. I'm Nick.
Thank you.
And today we're going to talk predominantly about Boda and Kaiser, in particular new results of Kaiser. Ian's going to take the lead on that, and I'll tell a bit about Tomingley, and we certainly welcome any questions. I know some have already been submitted, and we look forward to being able to answer those. So to break it down in more detail, first Ian's going to talk about the initial Kaiser resource, and we're going to put those together with Boda and talk about the sheer size and scale of that. We'll talk a little more about the North Molong project geology, because we often get some questions about that, and certainly we can dive as deep geologically as people wish to go on that. We'll talk about where we're going to explore and drill further at the North Molong Porphyry Project. I'll go a brief on the TGEP and its approval and what that means, and then I'll talk about the Tomingley path forward, and then we'll dive into the questions and answers. Ian, over to you, mate.
Okay. Thanks, Nick. Just in case people are not totally aware of where the project is, on the left-hand side you can see a map of the central western New South Wales. The cities of Dubbo just in the middle, and then City Orange down further to the south. And the North Molong project sits in the middle of that area. So we're in an area, we're about 100 kilometres north of the large Cadia operation of Newcrest, about 100 kilometres to the east of the North Parks operation, which is owned by the Chinese group now. So in a nutshell, basically what we're dealing with is a large area of Ordovician age volcanics with monzonite intrusives. These are the intrusive complexes that drive the porphyry copper gold deposits. And you can see the plan on the right showing a number of sort of purple blobs going through the green area. So the green area is the Ordovician volcanics, the purple is the monzonite intrusive complexes. And you can see the extent of the area. So down in the southeast, you've got the Boda and Kaiser intrusive complexes. And then as you go up to the centre, you see Comabella and Drill Creek. And then right off to the far northwest, you see the what we call the Finns Crossing group. So that's really the broader issue. And I'm going to zero in really on Kaiser and Boda. So the main driver for this presentation today was to talk about the Kaiser resource. And as Nick said, I'll come back and talk a bit about the combined. The map on the left is showing the drill holes, and you can see Kaiser there's a red blob in there, a reddy white blob, and that's the magnetic feature that makes up the Kaiser intrusive complex. And you'll see all the drill holes as a series of dots and lines coming off it. The drill pattern in Kaiser is roughly 100 metre spacing, so the lines are about 100 metres apart. The total resource there is about 1 kilometre long and about 700 metres wide. And the resource is marked by that purple dash line you can see dotted around the outside. Now, if we pick one cross-section through the middle, you get an idea from that cross-section on the right-hand side. The interesting thing about Kaiser, that what we've learned a lot of in the last 6 months, is there are two very large structures, large fault structures. You can see them shown on the map there, on the section, and they isolate and separate parts of the ore body. But in the short term, the key target was an open pittable resource, and that open pittable resource is confined by those two large structures you can see in the middle of the image there. So those reds and oranges, and that you've got the purples, that's the core of the Kaiser deposit, and that's what the resource has been wrapped around to date. The areas to the left and down deep are not currently included in the resource base.
And we've done seismic here as well, haven't we, mate?
Not on Kaiser. We've done gravity, magnetics. We're thinking about doing seismic, but we haven't done seismic today. But that's one of the things we're thinking about. Yeah. So going to the resource, so on the right-hand side, you can see what we call the block model. So each of those blocks is made up of ore inside the system. The colours obviously designate the grades, and you can see the reds and purples and oranges are the higher grade zones, and there's a core zone that's coming down, and you can see it plunging down to the northwest at the bottom of the image there. The other important thing to notice is that We deliberately cut the resource off at 100 or minus 140 metre RL, which is about 500, 600 metre below surface, because we felt that adequately defines what we believe is an open pittable resource. And that block model you can see there again is about a kilometre long and about 700 metres wide, sort of east-west. On the left-hand side is the table. And what we chose, based on all of our knowledge of similar deposits elsewhere in the world and in Australia, a cost structure to what would face to an open pit, develop an open pit mine on this type of deposit, and that drove the resource. So the top table you can see the main resource, 270 million tonnes, with a cut-off grade of 0.03 grams per tonne gold equivalent. The gold equivalent just takes into account the value of the gold and the copper together to give a sort of a meaningful dollar value. So you can see the first one there, the gold equivalent grade's about 0.54. Individually within that's 0.24 gold and 0.18% copper. The contained metal shown underneath, 4.7 million ounces of gold equivalent, made up of roughly 2 million ounces of gold and 500,000 tonnes of copper metal. As part of the overall exercise, and looking how this compares with Boda and how it forms part of the overall complex, we did a 0.4 gold cut-off because we did that at Boda to maybe consider doing an underground operation after an open pit. And so we used the 0.4 there, and you can see the tonnes and grade there, 164 million tonnes at 0.67 gold equivalent. I'm not going to go through all the numbers, but you can see that certainly raises the grade considerably, should ultimately the economics dictate that this could be mined or should be mined by an underground operation. The grade tonnage curve, I won't sort of go into great detail. This just shows what happens, and people often ask us what happens if you have higher grade, what does it reduce the tonnes to? And typically these porphyry deposits often have the bulk of the mineralisation sits in the broader, large tonnage envelopes. And hence, to show that best, we put what's called a log scale graph on the left-hand side. So you have to take that into account when you're looking at the numbers. But you can see the 0.3 and 0.4 cut-offs along the bottom line. If you go to something like a 0.7, you can go up and you can see it has a grade of around about 1 gram per tonne, but you end up at around about something like 60 to 100 million tonnes of material in the ground at that grade. It's really there to help you look at economic models down the road. When you combine the two together, so you now combine Kaiser with the previous defined resource at Boda. So the table on the top again is the 0.3 cutoff. You can see the two deposits, Boda and then Kaiser, and then the combined at the bottom, a very large resource, nearly 900 million tonnes at about 0.54 equivalent gold, which adds up to around about 14.8 million ounces of gold equivalent. So it's a very substantial resource of a grade that we think is of economic value. The table underneath is the 0.4 cutoff, again, just for what it would look like as maybe as a standalone underground operation. You get the same sort of appearance. You get 500 million tonnes at 0.64 gold equivalent, about whatever that is, I can't even read, 14.8 million ounces.
No, 10.6.
Excuse me, I'm looking at a very small screen here, so it's 10.8. So that gives you an idea of the comparison if we're looking for a broader open pit operation to an underground operation. And that's a long section where we've combined all of the drill holes over the Kaiser Boda system, includes Boda 2 and Boda 3. You can see the colour grades there, the pinks, or the reds and purples are the higher grade zones. You can see Boda is a very long sort of ellipse-shaped ore deposit plunging to the northwest. And Kaiser's slightly different. There's a lot of higher grades up close to the surface, which is encouraging from an open pit perspective. And that shows you how the Kaiser deposit's more stretched, but also provides an immediate open pit operation. The other areas, we used to call it middle area between Kaiser and Boda corridor. We now believe that corridor really is part of the Boda ore deposit, and we'll include that going forward. And Boda 2. And at Boda 2, if you look at that section, you'll see deep down, you'll see a number of reds and pinks and oranges, which really indicate that at Boda 2, there's a higher grade core zone at depth, which we've really only just started to understand, and that's where a lot of the drilling is currently taking place. So on to the broader geologic setting, and this is really here just from more of a technical sense. One thing we do know that in this central west region, if you take Cadia, for example, One of the key drivers to forming big deposits like Cadia is the intersection of these north-south, big north-south structures with northwest trending structural corridors which dislocate and change the orientation of the deposits and the intrusives. So Kaiser and Boda sit at the junction of one of these corridors, but we also know that we're going around to the northwest, and that will drive our exploration going forward into that northwest corridor, which is, again, at this stage, very untested. This just shows it in sort of detail with the magnetics. You can see Kaiser and Boda to the southeast, the southeast corner, and then up through the Comabella and Drill Creek, and finally Finn's Crossing. And some of the other drill intercepts that we've had on regional exploration over time in those areas, we really haven't put a lot of effort into Comabella or Drill Creek in the last 6 or 7 years, but they're high priority, as is that area up in Finn's Crossing where there's a magnetic body, a long linear magnetic body up there, which we believe is a skarn, and I won't go into too much detail about what that means, but it's a potential significant target. And in terms of regional exploration, what's going on currently is that we are doing a lot of air core drilling, so shallow drilling to the south of Boda, where it goes down to onto that new exploration license down there. We're filling in the gap between Kaiser and the Drill Creek complex, and we'll do more air core drilling in time up on the Finn's Crossing targets up in there. So they'll give you an idea of some of the regional stuff we're doing, not specifically into the deposit areas that we're currently focused on. Is it else on that?
No, I think we can answer more questions.
Yeah. Just if I just have one just going back to that long section, some of the drilling right now is very much focused on the area of Boda 2. I guess there's two components. We're drilling the core of Boda and again infilling in Kaiser to take those inferred resources up to indicated resources, which means we can then do proper economic studies on and put pit profiles or underground development on it to show what the economics might be. In the meantime, we're drilling Boda 2, mostly, not Boda 3 too much at this stage, really to understand what that mineralisation is, how extensive it is. As you can see there certainly are high-grade zones at depth, and the idea is to have a look at some of those and see how they might come into the broader inferred resource category over the next sort of 8 to 10 months.
Yeah, by the end of the year, we want to have indicator resources at Kaiser and Boda, and then an inferred resource, assuming it geologically hangs together over pretty much the entire long section you can see there as well.
Correct, yep.
So on to Tomingley. Many existing shareholders will be familiar where it is, but those that aren't, it's Dubbo, roughly 4 and a bit hours northwest of Sydney, and in between Dubbo and Parkes to the south is the town of Tomingley and the mine site we have there, which has been running since late 2013. First gold in 2014 is located there. So fair bit on this slide, and happy to take any questions, of course. The picture on the right, you can see the Wyoming 1 open cut that we have an existing underground underneath at the very top. Then we have a red line, which is our existing exploration drive. This is its status at the end of January, all the way down to the bottom of the screen, where it's quite adjacent right now to the Roswell mineralisation. That triangle shape you can see is where we're doing the infrastructure for the vent rise, and the little arm out to the right down the bottom, the McLean's deposit. We're quite interested in understanding the size and scale of that, because we think we can add that to the resource, is right adjacent to that vent rise. The reason why I point that out is we have existing approval already for that exploration drive, and that will include doing grade control drilling that will start in May. And we're currently doing underground drilling at McLean's at present. And we'll put that vent rise in all under the exploration drive approval. Then overarching that, which we received early last week, we had the project approval granted for Tomingley. So this project approval allows the open cut development of Roswell and San Antonio, and the underground development of Roswell, a new portal, diverting the highway, upgrading the mill to 1.5 million tonnes per annum, all the things we've communicated previously. We now have that approval. That's the mine life going out to 2032 approved. From that, so subsequent to that, the timing, the environmental protection licence and the mining lease are subsequent approvals. They are legal formalities that will follow now, and effectively think of it like the approval lists in quite heavy detail all the things that must be covered in environmental sense and in a mining sense, But then the environmental protection license and the mining licenses fleshes them out in the next level of detail and integrates with the way we manage the site. And so that's what happens. They're formalities that now come. We expect to have those wrapped up for the middle of the year. We will continue, of course, working on the exploration drive, which includes drill cuddies to do final grade control there during that period of time. That's why I say we expect to be mining ore from Roswell underground before the end of this calendar year, before the end of 2023. The second residue storage facility, you can see in the top left of that picture, you can see some sort of slightly cleared land or dug up land. That is the second residue storage facility. That's already under construction. We expect that to complete in the next few months. That residue storage facility, which we've had now approvals to lift even higher with the project approval for Tomingley, that sees out the mine together with paste fill for many, many years across the course of the mine life. So that's great to see that under construction. The process plant engineering is in two parts. One part, it puts in a float plant to increase our flotation recoveries, particularly some of our lower recovery ore bodies in and under Coloma. The second part is to increase our throughput to 1.5 million tonnes per annum when the open cuts come online in a couple of years. The road design and the road diversion, which sees the highway, which is a grey line, already moved to the left, that design is nearly complete and signed off by Transport for New South Wales. We'll start early works on that once the mining lease is granted. And then people will see us working on that over the subsequent next couple of years so that it will be tied in before we go to put the open cuts in it, particularly at San Antonio. We start open cuts at San Antonio. People often ask about water. We already have additional water license secured in the event we need them. We don't currently need them. We bought them to make certain that in very dry conditions, we would still be okay to run. We don't need them. We have a lot of water already stored at site from the heavy rains that has occurred. But that's already been secured and we have pipeline easements for that already. We intend to be at a run rate of 100,000 ounces in 2025. We'll get that by the higher grade at Roswell, slight increases in production at our existing plant, and then expansion of the plant and the tying of the San Antonio open cuts. In order to keep our balance sheet preserved, we have $100 million in cash and bullion and 20 million in investments. As at the end of the last quarter. In order to make sure that we had a very adequate buffer for that, we took out a debt facility with Macquarie of $50 million and put 100,000 ounces of hedging in place. The hedging starts from the start of calendar 2024 and goes through the end of calendar 2026. It's 40% of the production we expect to do during that time. And the average price we have for that is $2,825 Australian. That would mean that the price would have to fall on spot to $2,100 an ounce for the entire period of that time in order for us to realise an average price in the mid-2000s. So it's a very good position that we've got ourselves into for that. So we're really going to see all systems go at Tomingley for the next couple of years as we ramp up to the 100,000 ounce run rate. Already we have things like McLean's. We're open at depth at Roswell. We're finding more ore underneath Coloma at the existing mine and under Wyoming 1 at the existing mine. Under Coloma 2 is also open at depth. So we're very, very confident in our capacity to continue to produce. And now we have a clear line of sight through the 2032. We're very excited about that.
Thank you so much for the update, Nick and Ian. That was very comprehensive. We have had quite a number of questions come through, so we'll work through them. Given the company's strong and consistent record of profitability, when is Alkane likely to start paying dividends?
That's a good question. We talk about that at board. At the moment, we think our capital is best deployed in making certain that we can do the Tomingley development, without needing to do anything else for financing. And so we won't be paying a dividend whilst we do that development. And we're also at the moment believe that we get a lot of advantage from continuing to put our money into exploration. So we have a line of sight on that through until 2025. So 2026 would be the first financial period that we'll consider doing a dividend. But as we know, the world shifts and moves and opportunities arise. But certainly if status quo were to continue, it would be 2026.
Thanks, Nick. Our next question, when do you expect to receive first assay results from Boda 2 and 3 drilling? And is drilling planned on the mineralised areas to the northwest of Kaiser?
Basically, the results are coming in as we speak. And we've really, as you know, we've tended in the past like to put groups of the results out at least 10 holes at a time. Otherwise, it just becomes an overriding driver for what we're doing rather than getting on with the job. So we should have results on Boda 2, the first drill results on Boda 2, probably before the end of March. We're still infilling on that area to the north of Boda itself, doing infill drilling there as well. And Kaiser North extension of drilling will really depend a little bit on what we see from the air core drilling we're doing up there. But some stage we'll be programming drilling there as well, deeper drilling.
Yeah, and so traditionally we never release air core results because they're just trace levels that give us a cider for our exploration perspective. And then normally we tend to do releases of exploration results probably about every 8 weeks as they come in, because that tends to be about every 10 holes. So hopefully that answers people's questions about Boda 2 and 3 results.
Okay, our third question. When do you anticipate drilling deeper holes at Boda and Kaiser to test at depth, or do you plan a decline first to drill at depth?
A good question. In an exploration sense, in cost sense, you reach a balance between how deep do you drill from surface before, when you look at putting in a decline to go down and look at. To drill a decline now, we'd have to have better understanding, get an indicated resource on Boda to understand the geometry, three-dimensional geometry of the mineralisation better. So as part of this indicated drilling, we'll be infilling a lot of the work that's already been done, which will help us to work on that 3D model. But we might also put 1 or 2 deep holes just to look at the system at depth. But right now, that's not a priority for us.
Yeah, there would only be maybe some infill holes at Boda at depth.
Correct.
At best.
We've got holes that are over 1.2 kilometres deep at Boda, and certainly there is mineralisation at that depth and extensive alteration. But as I said, in the short term, looking at development, we want to understand the three-dimensional geometry of that upper 1 kilometre so we can plan a mining operation.
Thank you. Okay, our next question. In the past, you mentioned the possibility of going to the US and Europe in order to attract more investment. Are you able to elaborate what kind of investment you are referring to? Is it to attract more institutions to the Alkane register, or are you looking for a JV partner for Boda and Kaiser?
It's the first one, to attract more institutional investors to the register. So in particular, Ian and I have the broad view that porphyry projects tend to be more on the institutions, understanding in some of the larger houses in the US and Europe, particularly in Canada. And so it's those that I'll be looking to meet, going to things like Denver Gold and Beaver Creek and things like that. So it really is briefing and seeking institutions that want to come onto our register, and at the moment there's only on-market opportunities for that. Of course, along the way, I'll meet institutions or banks or other people that may well actually be representing someone else, or we might get approached by larger companies. And of course, I'll take those meetings, and of course, I'll listen to what people want to do, because we're not averse to that. It's just, no, we're not seeking that. We'll be trying to put the company in the best position by going to indicator resources, showing the maximum potential of Boda, continuing to show that Tomingley is a stable and profitable asset, which many people are becoming not stable and profitable at the moment, particularly here in the West. And then, launch any kind of other discussion from that footing.
Okay, our next question. Can you outline the permitting pathway for the development of Boda and Kaiser?
Oh, certainly. So it's pretty much exactly what we've just done at Tomingley Extension Project. So, the first thing is that we will need to have a resource, right? So we need a resource that's economic, and we will have that by the end of the year. Then we have to wrap preliminary mine plans. We'll do some concept studies through this year. We need to then turn those into a feasibility study, which looks at things like, exact recoveries and exact tailings generations rate, acid rock drainage, et cetera, which is next year's work, so calendar 2024's work. From that position, once a broad mine plan and concept is understood, there are several things that need to occur, which include landholder negotiations, understanding where we're sourcing power, understanding where we're sourcing water for the size scenario that we're referring to, and then doing the baseline environmental studies, which are, flora, fauna, Aboriginal heritage, European heritage, all across that impacted land space. All of that gets wrapped in an environmental impact statement, with at least 2 years of baseline data. And so we're commencing that data this year. And then that environmental impact statement is lodged with the government for review. What they then do is come back and they sort of test it for what they call adequacy. So have we on first glance sufficiently addressed the issues that they've referred to? And normally, we have, but sometimes there are shifting movements on how different biodiversity things need to be treated and stuff like that. That then, once it's allowed for adequacy, gets put up for public display. Public display lasts for a period of time, typically 8 weeks. And then people comment on that. They can be businesses, they can be landholders, they can be local community members, and they'll comment on pros and cons of it, and all those submissions form. The government then considers those submissions and either sends it to an independent review committee or it's determined by the minister. We've had both of those in the history of Alkane. For Tomingley and then the Tomingley extension, there was simply addressed by the minister for the Dubbo project, but when we got that approved before we demerged the company, that was to an independent planning commission. So that's public. So to give people an idea of what that timeline is, typically from submission for adequacy to public display, assuming there's no really weird things that emerge geologically or aquifers or things like that, that's typically a 2-year process. And then the determination process depends on the issues that arise for the stakeholders at the time. I hope that answers the question. There's a lot more detail available certainly on the New South Wales Department of Planning's website.
Thanks, Nick. I think you answered that question very well. So our last question for today is, from what you know about the Kaiser ore body at this stage, do you have a feel for a strip ratio for a potential open pit? And separately, is there an oxide cap at Kaiser similar to that which exists at Boda?
I'll start by just on the oxide cap. There is no real oxide cap either at Boda or Kaiser. There's a slight weathering effect where you might have 10 metres of slight oxidation, but certainly there's no deep oxidation. It's not as though it's like at a ore deposit in Western Australia we might get 100, 120 metres or 50 metres of oxidation. We don't see that. In fact, you can find outcropping sulphide mineralisation on the surface around Boda and Kaiser. So the reality is that's not an issue for us.
With respect to strip ratio, obviously we're in the really, really early stages of that. Certainly, with ore bodies like that and of the size and scale, there are pits in there that are smaller that could be a 1-to-1 or less than 1-to-1 strip ratio, but that wouldn't take out the entire ore body. And then there are ones that could be 600 or 700 metres depth that might have with a strip ratio, say 3-to-1 or something like that. We're in the really, really early stages of that, and we haven't wrapped economics or scheduling around that. That will be part of the trade-off around, what's the sort of right sizing, because then all of that leads into what size plant do you want and what size footprint is that, and where might tailings be stored and what's the water supply going to be, and there are all other natural constraints as well as the ore body itself.
Okay, that appears to cover the majority of our questions from our audience today. If you do have any further questions for Nick and Ian, please feel free to forward them to info@corporatestorytime.com. Nick and Ian, do you have any final comments?
I believe that Tomingley is proving itself to be one of the better assets of its size and class in the country. And particularly we see that as WA's FIFO community is impacted by labour shortages. So that's something well worth noticing. The margins that we have are good. The life that we've identified is good. The geological upside within the mining lease is good. I don't think we're really getting full value for that. It's pretty rare for me to say that. Most people will know that I would rarely make those comments. Particularly when we then go and look at Boda, where, people need to think about, well, what if this is coming into production in the 2030s, right? So we've outlined, an approvals pathway and then development and construction that, fast track would see this completed and in operating in, 2028, 2029. That would be absolutely fast track, assuming things went smoothly. So what is the pricing going to be? Every single thing that Ian and I read points to a structural deficit of copper. And so this is quite a substantial ore body, and whilst people may think, oh, this can't be mined at these grades now, which is not correct because people are mining at these grades around the world in worse jurisdictions, certainly than Australia. What will it be in 2030? And that's what we're looking to do. And our core task is to define the maximum potential of this as we see it between now and the end of the year. And we certainly look forward to updating people on it.